global investing doesn't fail because of lack of demand. It fails because of poor structure underneath.
Most of the people think that they really underestimate the global market access. They say that it's just a button in their apps or like kind of small feature that they add, etc. But behind this, there is a huge work starting from settlement reconciliation, who is your global partner, how the settlement is going to be, who is your custodian. And this is quite huge work. They have to assess carefully. The investors do not experience access to global markets. They experience execution, they experience fair execution, like prices, like correct prices, correct reporting. You have to think about your customer and trust, which you shouldn't. You don't have a luxury to you can't bolt on later some controls, checks, and define operational model later because it might be fatal for the business, for the customers, and like for their trust. They should not treat this business as just a feature because it's a quite complex thing, and they have to treat it as a business system.
Today's topic is what it takes to start global investing with the right structure. I'm joined today with my guest Tawfiq Hassanov, director from Uni Capital Investment Company. So global investing is no longer a nice to have. Today, investors across regions want access to international markets, almost by default. But what we've seen repeatedly is that global investing doesn't fail because of lack of demand. It fails because of poor structure underneath. In this conversation, I want to go beyond service level access and talk about what works with investors and platforms and how we can expand those globally. I'm really looking forward to unpacking this with you, Tawfiq. So I'd like to kick off and focus and discuss what global investing really means. So when firms say they want to offer global investing, what do you think they usually underestimate at the very beginning?
Hello, Samer. Happy to be here. I like the framing very much because most of the people think that they really underestimate the global market access. They say that it's just a button in their apps or like kind of small feature that they add, etc. But behind this, there is a huge work starting from settlement reconciliation, who is your global partner, how the settlement is going to be, who is your custodian. And this is quite huge work. That's why I think that they have to assess carefully. Assess carefully before starting to go live, and particularly select the reliable partner who is going to guardrail them in this process.
And maybe I should have taken a more in-depth view on this topic, because we see many platforms treat global investing as just a simple, as you mentioned, click of a button to add a market, rather than connecting the systems. And we see this when broker-dealers want to go to the market quickly. So I'd like to understand from you how you see this. I'm sure you also have that same view, right? If you want to go to market quickly, you should connect your systems properly internally before just clicking a button and adding new markets. And I'd like to follow up with that and ask, is it fair to say global investing is more of an operational challenge than a product one?
Exactly.
Because you mentioned custody, clearing, and that part.
The first one, if some company decided to go global, they have to define the first structure. Because if they go feature-based at US markets to their app without thinking about all this stuff, such as reconciliation, corporate actions, such as defining how money moves, how the settlement happens, how foreign exchange operations happens. They face risk of explaining the regulators why things go wrong, and they risk to lose entire trust. Because access to global markets, like the investors do not experience access to global markets. They experience execution, they experience fair execution, like prices, like correct prices, correct reporting, quite accurate postings on the dividend postings on their accounts, accurate stock splits, etc., and all other corporate actions. And If the investor sees that some figures are look vague or so, they are not going to use your service again. And you may have some technical debt that you didn't do previously, but trust debt is fatal. You have to think about your customer and trust which you shouldn't. You don't have a luxury to use.
Yep. And based on your experience, where do you usually see the cracks appear first?
Cracks, I may say, like in the reconciliation operations, wrong corporate action postings, wrong dividend postings, tax reporting, all that stuff. As I've said previously, if the investor sees that something is like wrong commission, wrong reports, wrong PMAs, and all that stuff, like many small things affect the customer trust. And what I want to say, that customer once a customer got an access to the platform, he expects the same performance as global providers do provide. You can't explain them that something goes wrong, etc. You have to adhere to the widely recognized standards of execution, postings, of accuracy, of reporting, etc.
Thanks, Tawfiq. That was pretty insightful. And moving forward, I'd like to understand, we always talk about having the right structure, but it's a very abstract term. From your experience, what does the right structure actually mean when you're building a global investing platform? There's a lot of emphasis that investors don't see structure, but they feel delays, friction, and confusion. Can you share your experience on having this right structure?
I would say that structure is the architecture. It's an invisible architecture that makes trading experience seamless for the customer. When he got an onboarding, he accessed or she accessed the platform, sees the prices, clicks on buy button, executes, takes the receives the predictable outcome. Sees the outcome, reports, settlement, corporate actions, and actually the structure should be defined based on the outcomes which investor should receive. I would say, for example, if we start to provide service without kind of defining the structure, we risk that the client will just lose their trust, see that the execution prices are ambiguous. Many questions arise when investors have an experience in the app. And this many experience, with these many points, they create a whole picture and feeling that something goes wrong or it's okay.
And to follow up with that, in many growth conversations, we often hear complaints that sound like we're having this front-end issue, which is obviously what the retail client sees, but they're actually structural. Can you share what that right structure actually means?
Structure when you define your operational model. So you know who is your CVs, who is your custodies, who is your client is, because there is a huge difference between retail customer, institutional customer, and high net worth customer. They have different profiles. So you define your operating model, you define who is your counterpart, you define who is your custody, how the money moves, how the settlement happens, how the corporate action is going to be posted, the eligibility criteria of the customers who onboards to your platform. For example, some customers may not be allowed, for example, to trade on specific markets, and built-in controls like should be there, such as AML, such as risk controls, limits, approvals, all that stuff should be embedded in the system. So, as I said, controls cannot, the structure should be defined at first, and you can't bolt on later some controls, checks, and define operational model later, because it might be fatal for the business, for the customers, and for their trust.
Thanks, Tawfiq. That was very insightful. And just a follow-up question to that answer: how does structure influence investor confidence over time?
I would say a company which provides access to the global market for execution services, like brokerage services. Onboarding is not a kind of the main thing. Once you onboard the customer, you have to retain the customer. And if you don't provide them correct, predictable outcomes when they do their investment, they rapidly lose their trust and prefer some other service provider which provides them predictable outcomes.
Yeah.
Any of previously mentioned aspects may affect them. Customer may easily recognize that execution price is different, that P&L, because it's quite sensitive topic, because money is very sensitive to the customer, and once something is wrong, they quickly lose trust and shift to other service provider, which is more reliable.
Thanks, Sufik. That was very insightful. I'd like to move on to our third part, which is different investors, different structures. And we all know not all investors approach global markets the same way. In your opinion, should global investing look different for retail investors versus high net worth individuals or institutional clients? We see expectations shift dramatically as investors go global, reporting, access, speed, reliability. Can you share your thoughts on how that looks different from retail to high net worth to institutional?
For sure, the difference is, I would say, significant, and if some of the service provider will decide to mix them, he will rapidly face the friction. I would say, for example, retail customers, they need fast onboarding, they need small ticket sizes such as fractional shares, all that stuff. They require like easy reporting, like understandable functionality, some education, some guardrails, which will ensure that they will do some mechanisms which will guard them not to make some wrong mistake, like wrong choices, mistakes, etc. On the other hand, high net worth individuals and institutional clients, they require audit trail, more deeper, complicated reporting, access to the wider number of instruments. There might be some sub-custodian, sub-account schemas, maybe holding the assets on the different custodians which they indicate, and all that tailored stuff. And if we will mix them, we will lose both audience. It's just a matter of time whether we will lose this one.
Okay, I'd like to move on to our fourth section, which is around infrastructure and scale. So one thing we've seen consistently is that interest in global investing scales faster than infrastructure. I'd like to ask, why does infrastructure become the real bottleneck once firms want to move beyond one or two markets? Can you share why infrastructure can become a bottleneck when you want to expand into different markets?
Because when you approach new markets, it means that new custodians, new routing logic, new execution things, new settlement models. There are many things that should be added on top of your current logic, and if you don't have the planned and defined structure, or if you have fragile infrastructure that can't support this scale, you just simply may destroy what you have what you've built previously, and it's rapidly become a complaint point for all your customers. Good infrastructure is a complexity absorber, I would say, so you can't build on top of fragile infrastructure.
And as a follow-up question, what do you believe what infrastructure decisions are always hardest to reverse later?
I think many people think that it becomes earlier than many companies may think. So even when you have low volumes, if you need a wrong decision on the settlement model, on the ledger model, or the reconciliation, even then it may have
some irreversible consequences for the company. I advise to thoroughly consider the infrastructure and the structure of the service the company is going to provide.
And this is an important question I'm keen to understand, to hear your thoughts. What should firms prioritize early if they want to scale globally?
They should choose the right, I believe, the main point is to choose right partner, because partners shouldn't just say, here's the APIs, here's the manual, and
That's it.
good luck. They should be a partner that not just a vendor. Should be a partner which shares some responsibility on the outcome, which supports you and wishes that your model is going to be sustainable and may scale up later.
Yeah.
Only this may define the success of the company which is going to provide access to the global markets. Besides that, there are several important points such as defining who is your custody, what is your execution model, etc. Many things.
Thanks, Tawfiq. Very insightful. Moving on to the fifth section, partnerships as a global strategy. Very few firms build global investing entirely on their own anymore. I'd like to ask, why are partnerships so critical when it comes to global investing? Can you just share your views on vendor relationships versus strategic partnerships?
Yes, of course. I can say that we are providing service since 2019 to the global markets. And I would like to say that if you have a vendor-client relationship, it's going to be hard to move on, because the participants which are entering this area, this sector, there are many little nuances which may disrupt your operations. It's important to have some partner who will guide you through this process, because there are many things that company should consider when entering this. As I mentioned previously, it's not just a feature. It is a business system that have many aspects within. And your partner should give you concrete methods of resolving all the matters, such as reconciliation, such as corporate actions, such as settlement, execution, and don't have to push you to go with a raw product to the market. It's very important, because most of the time to market is a really good thing, but there should be some understanding that this is the complex business and you have to treat it very carefully.
Yeah. And in your opinion, what should firms look for before committing to a global partner? I know you mentioned a technology provider should not just give you the APIs and go figure it on yourself. Is there anything that you feel that firms should look for before committing to a global partner?
Sure. They have to ask tough questions. They have to, global partners should treat you as a partner, not just as a service provider, etc. Because there are many things, and you have to understand what is the response. You have to ask the questions like, who is the responsible of what? Because in this process in this cycle there are many participants, and global partners should show you what is your role, what is their role, and you have to clearly understand the role of each other.
Yeah, thanks, Tawfiq. That was very insightful. I'd like to move on to section 6, which revolves around execution and investor experience. So once investors go global, expectations change very quickly. In your opinion, how do investor expectations evolve once global access is available? Can you share some insights around this?
For sure. Once the investor gets an access to the platform, they start to treat you as leader. They don't actually, the investors' tolerance are very low on some service lackage. They quickly loses their interest if they face some frictions, if they face some problems in the appearance or execution or understandability. And the main thing that you have to make investor experience smooth on every side in order to retain them. Because if the customer is inactive, you lost them. So you have to make sure that every aspect of the platform is working correctly.
And as a follow-up to this, why do you believe some platforms lose investors even after offering strong global access?
It was the lack of quality. The main thing is the lack of because customers don't say that they, for example, the custody system is immature or they have some problems in PMA. They just tell that these apps works badly. I don't trust them. I want to change them. It's quite a complex thing, and you have to treat the problems and arising issues in your platform very seriously.
And in your opinion, what does good execution really look like from the investor's point of view?
I would say it's a predictable outcome. When there is no slippage, there is no some unexpected fees, when the settlement occurs as expected, and everything looks as it should. I think it's enough to have to say that you're providing good service, but under that there is a whole bunch of things that should work properly in order to happen.
Thanks, Tawfiq, for that answer. I'd like to move on to section 7, which is the last section of our discussion today, which revolves around the playbook, as they say. In your opinion, what are the non-negotiables for starting global investing with the right structure?
You have to define your operating model. That's the main thing, like one of the several main pillars, I would say. You have to think about your reconciliation, how you are going to compare you with the tools, which is reside on your broker, on your custody. It's very important. The third one, how do you treat the corporate actions? Because if the numbers seems vague or like there is wrong postings, it immediately affects the customer trust, because it's very important.
Yeah.
I would say. And choose the right partner, because partner should treat you as a partner.
Yeah.
There should be some sharing of responsibilities, which every party knows what their responsibility is. And they don't say you that this is your problem. They try to solve with you, advise you and direct you, because this is not solo business.
Yeah.
You are dependent of many, and I would say it's bonds.
And to take it a step back, obviously we spoke about global investing, but before getting to that, and you want to expand globally, obviously there are mistakes that happen here and there, but what is one mistakes you believe firms should stop making immediately before when they want to expand globally?
They should not treat this business as just a feature, because it's a quite complex thing, and they have to treat it as a business system. So the right structure and planning and understanding how each aspect of this flow is working is crucial to succeed.
And if you had to give one advice or one piece of advice to a firm starting global investing today, what would it be?
Define the structure, select your partners correctly.
Thanks, Tawfiq. This has been a really insightful conversation. The clear message is that global investing works best when structure comes before speed. Thank you for your time. It was a pleasure hosting you here in Baku, and we look forward to continuing our partnership.
Thank you, Sam. This was a pleasure.